But thanks for coming on to this podcast. I really wanted to kind of just talk to you and share with our audience what we're doing and give them some insight into what's happening in industry. Since you and I both are very deep in the tokenization space with blockchain, that maybe we can share some insight on what's going on and provide original content.
Yeah, much appreciated.
So Claus Skaaning, the CEO of DigiShares, which is a platform for issuance of security tokens. Why don't you tell the audience a little bit more about DigiShares, what you're doing, and then we can kind of get into some of the real conversation.
Yeah, great. Hello, Ed, and thanks for inviting me here. It's a pleasure to be on the call with one of the real pioneers in the tokenization space. It's much appreciated, and I look forward to our discussion. So DigiShares is basically, it's a European provider of white label tokenization platform for tokenization, and with a primary focus on real estate, which we see as the single largest asset class that is ripe for tokenization. We are based in Europe, but we are international in scope, and we have clients around the globe on 4 different continents, and we also set up a department in New York City quite recently. That's maybe a short enough intro for us.
Yeah, I mean, tokenization for many is still a mystery. I speak to hundreds of property owners probably in a month's time, and many of them they still associate it with cryptocurrency, and you're actually converting their building into coins, and they're going to receive coins for value. And so it's misconception about what we're doing. So my job has really been to educate many business owners that own property and teach them what the advantages are for tokenization. And, I think overall, they're now starting to come around. I mean, the phone is ringing a lot more than it used to. And I think people are really interested in using that equity for their own good. And they realize that there's a lot of equity out there that could be, brought to their properties. Are you seeing, some changes happening in the industry? I know we've been together for seems like forever, but it's been 2 years or so. What kind of changes are you seeing in the industry now with regards to tokenization of real estate assets?
Yeah, and I think we see pretty much the same. So the industry has matured a lot over the last couple of years. I would say if you look back about a year ago and before that, there wasn't really much traction in the industry. We didn't see a lot of interest, and generally it developed quite slowly. But I think since then a lot has happened. The industry has matured. Regulations have opened up around the world, and it's just become much easier to tokenize. The lawyers, the legal partners have learned that it's not like sending a rocket to the moon to tokenize. It's something that should be routine and simple. They shouldn't charge 100,000, but maybe 5 or 10,000 to do it. And many countries have opened up regulations that actually support it. So it's just becoming much easier generally, and we've seen a massive increase in interest in the last year or so. I would say what also helps, of course, is that the overall crypto adoption, the crypto boom. We have actually been working on a version of our system where you can you can interact with the system. You can use the system with fiat currency, and the fiat currency is then converted into stablecoin internally in the system. But we are seeing the crypto adoption happen in parallel to this. So maybe it's not even necessary to have that kind of product on the market, and maybe we will be overtaken by the crypto adoption. It will just become normal business to use cryptocurrency to interact with these systems here.
No, you're absolutely right. You're right, Claus. I mean, I think that the real change that has taken place over the past couple of years is the rise in the amount of cryptocurrency in the marketplace. I mean, you think about 3 or 4 years ago, we were talking about, $400 or $500 billion of cryptocurrency. But now as the currency has increased and more coins have come on board, we're now over $1.2, $1.5 trillion, depends on what the price of Bitcoin is in terms of market cap. And that's going to continue to grow as people adopt into cryptocurrency as a way of doing business, and also as a way of just kind of, diversifying their savings, right? And so I look at it as this, those people with that kind of money into the marketplace is really hard to avoid or ignore, trillions of dollars worth of capital in the market. And if you're not open to receiving it, just like if you don't have a website, currently, if you're in the retail business, if you don't have a website to market your business, you're missing out on all that online activity, right? And so if you're in the capital markets and you have a property and you're not able to receive income from this digital atmosphere, then you're actually missing out on the growth of this significant product. So yeah, I think that's a major difference that is getting me really excited, is that we know that owners of crypto hodlers, cryptocurrency, have to park their money somewhere, and they know that if you're a student investor, you can't put all your eggs in one basket. And I'm not just to say that you can't put all your eggs in Bitcoin and that's it. You have to diversify your cryptocurrency. I think you have to diversify out of cryptocurrency into other digital assets.
Yes.
Right.
Yes.
That's a very smart move. Are you seeing a lot of that happening?
Totally. Yes, I totally agree. So with tokenization, I guess we are basically doing two things, or trying to appeal to two different target segments. One is the real estate developers, where we basically help them to automate processes and reduce administrative cost, and use blockchain technology to make their everyday work easier. But the other big use case is basically wrapping real estate in crypto, right? So making real estate accessible to crypto investors as an asset that they can diversify into, and I think that would be a huge thing in the future. So right now, investment managers are recommending that normal investors diversify into different assets, right? And I think we'll see the same in the crypto market, that crypto investors will be recommended to diversify into to real estate-backed tokens, potentially maybe 10% or something like that in the future.
Absolutely, and the institutions that are involved in this are, really looking at this industry very, very seriously. We've talked to many major institutions, like Fidelity, like Franklin, you name it, all the major Goldman Sachs. They're all trying to find a way to get into the business, and now they're offering crypto to their clients with caution, of course. Be careful. This is a very volatile type of investment, but they are offering it because their clients are now demanding it. They see that the rise of this investment class of currency is going up, and they're missing out. And by holding US dollar or holding euro dollars, which are actually depreciating in value based on inflation, and you're seeing the currencies improve in value based on adoption and people's attractiveness to it, people feel like they're missing out. So they're demanding to have access to this. But now I think that the institutions, from what I'm hearing, are looking for, they didn't understand cryptocurrencies. They thought they were pretty dangerous. They thought there was, very no asset, underlying asset behind it. And therefore there was risky investments, but they're looking at the entire space right now of digital assets and very, very interested in how you can now shift those cryptocurrencies into a digital asset that they do understand. And that's one of the reasons why, RedSwan is focused on commercial real estate, is because most of the capital markets industry, in terms of finance, are financing real estate type assets. And real estate is the largest asset class out there, with almost 75 trillion in commercial real estate. It makes sense for them to, to finance and also to look at digital assets and how it's pouring in. But the question becomes, why aren't we seeing more institutions involved right now? And do you know the answer to that question?
I think they have to make themselves stay relevant, right? And it's a good development, because it allows us to become less schizophrenic, I think, longer term, because in the tokenization market there has been, I think, a division where we have been forcing ourselves, or we have been sort of trying to stay away from crypto, or at least to try to avoid being associated with crypto too much in order to be able to work with the institutional investors and the corporates and so on. But on the other hand, we also want to very much work with crypto in order to engage the crypto community and the DeFi ecosystem and everything like that. So it's a good thing that the institutional investors are coming around and finally understanding that it's, I think, critical for their long-term survival that they understand what's going on here and somehow try to engage in it and understand how they can use it in their business and grow their business based on it. But with that being said, I'm based in Europe, and the adoption is not as fast in all the countries in the world. I think it may be going a little bit faster where you're sitting than where I'm sitting. It varies from country to country. I think in many countries it's going very slow, and the banks, the institutional players haven't even sort of seem to have done the basic business strategy research into this field to try to sort of predict what kind of future importance it could have for them. And I find that strange.
Yeah. Well, you're right. They have not been as active in maybe the United States. Institutional investors, companies are more active in learning what's going on, paying attention. I know they've contacted us. We've had many meetings with big institutions, even institutions like NASDAQ are trying to get their arms around what's going on. But they're always slow movers. So they're never going to jump in right away. They're always going to wait till they see a really, a significant amount of adoption, and also have a clear understanding of where they're going to play in this game of digital assets. But I think that, from our opinion, they're looking for a sizable area which they can now come into. And when I say that, when you look at real estate, they're looking for the type of quality assets that they're currently investing in as assets they can possibly invest in on a digital level. They won't go into small type mom and pop type investments because the check size is not big enough. No. So one of the things we've been trying to do is to increase the size of the content on the blockchain of digital assets, especially for commercial real estate, so that they can write a large enough check and also feel comfortable with the asset and the sponsorship behind the asset. So there's less fear in terms of something going wrong. But it has been interesting. There's a lot of adoption, and I think that by this time, 4 years from now, we're probably looking at close to $8 trillion of cryptocurrencies in one supply. And you think about $4 to $8 trillion. That's just a lot of money to ignore. Right? And also, as they move into this area, right, money pours in from fiat into digital. Right now, like I said, it's over 2 trillion. If it goes to 8 trillion, just think about how much money the banks and financial institutions have just lost if they're not actually adopting into it. So that can put people out of business. But I think we're scaling. I think the scalability is there. I find that building owners are calling, and they're now asking to be tokenized, which is a very good thing for you and I, because the first step in terms of raising capital on a commercial real estate project is to tokenize your project and make yourself digital, right? And just that process alone is what we're looking forward to. You're looking forward to, because it now puts them on the map with a digital footprint for their property. Then after that, we can now talk about marketing their assets and raising capital off those assets, which is what we're doing. Well, as you know, we're happy to say we closed the first transaction last week, which is very nice. And we're looking forward to a couple more this year to actually fill up. But I would say that one problem has been this waiting on the consumer, the retail consumer, has been a slow process. It's almost like you have to put your brokerage hat back on and pull them in, as opposed to the way they're buying crypto and Bitcoin, they're pouring in and demanding it. And I think that it's just because of lack of awareness.
It is. I think so too. I think industry reports indicate that 80% of everyone, the entire population, is interested to invest into real estate. So I think it's just lack of awareness that it's now possible for smaller investors with smaller ticket sizes to actually invest into real estate. So it's a matter of developing the awareness, developing the ease of use and the on-ramp from fiat into crypto, and yeah, to just generally make it much more visible and accessible. So I think the industry hasn't developed as far in that area yet, but for sure it will come. So we see yeah, many projects being completed, and hopefully they can also complete the fundraise. So we can get some successful cases and get the retail investors into the market.
I think there's a lack of awareness, and that's also from a lack of marketing. And I would say that's also from a lack of product, right? Yeah. Let's go back and look at the NFTs right now. NFTs are starting to surge. At this conference that I was at in Miami, they had NFT art galleries where people were walking around looking at the art. That's all Bitcoin type of art, and they're bidding on it. And I really learned about the NFTs today. When I was at the conferences, I was really confused about it. But basically, they were selling ownership interest and single ownership interest in assets, right? I thought they were divide the ownership interest into multiple owners, but I think that is become the next step. That becomes the next step. But it also, I think, draws a little confusion and possibly problematic for the SEC here in the United States, because they would think when you divide those assets up for the purpose of increasing the value as an investment, you now become a digital security, right? And so, but I am happy to see that the interest in NFTs has been very strong, which shows you that people who have cryptocurrencies are looking for diversity, right?
Yeah, and it shows that marketing pays off. I'm not so fond of the NFT developer myself, and I don't think it'll be so important for tokenization, I have to say. I think the regulatory and the legal issues with NFTs are uncertain and unclarified, and surely an NFT can be a security. And what then if the security, or if the access to the NFT is lost and we need to reissue? It's not possible because it's an NFT. So I think there's many sort of issues relating to NFTs that are not clarified, and so generally I wouldn't. We recommend our clients to not use NFTs if they want to tokenize, but rather use something that the customers can understand. But I think longer term NFTs will find their use case, which is clearly certainly digital art and digital content, digital assets of different types. And also expensive art and objects where you could sort of contractually have some kind of ownership for the entire thing. And then potentially in the future, we can also tokenize NFTs, I guess. So
yeah, I think that I started to ask myself why is NFTs taken off, and why are digital securities not moving as fast, right? But then I started looking at the actual demographics of people who are hodlers of tokens, not tokens, but securities, cryptocurrencies. They're younger populations. They're millennials. They're people who don't even own real estate, never owned real estate, right? Never owned investment real estate. But they now have this new form of wealth through the increase of their digital currencies. I met some guys at the conference who just said they were lucky. They bought in 2012, and one guy was doing a dollar cost averaging, paying $5, investing $5 a day every day since 2012 in Bitcoin.
Wow.
And
good
now,
idea.
He's extremely well-to-do, and he calls himself an angel investor. And I was amazing that they were that became their life, right? The value shot up, but they don't understand the real estate. Even the people in DeFi don't understand how real estate works. And so when you talk to them, and I spent quite a bit of time talking to these guys, some of them which have over $20 billion worth of DeFi in the marketplace today, right? So these are the super companies that are leading the industry. And I looked the CEO in the face and said, hey, why are you not buying real estate? And he said this: I don't understand it. and I need to make sure that I can be liquid, right? With the cryptocurrencies, I know there's a liquid market. And so if it's going down, I need to exit very quickly. I can easily exit off my Bitcoin or other cryptocurrencies. But on real estate, I would have a hard time doing it. And so it was no, 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 no the whole time. Then I brought up the important fact. I said, well, you know, you have this method for holding on to the cryptocurrency and also covering it in case of movement by putting puts or calls to kind of collar the asset in case it falls down in value. And you also have a way to quickly liquefy it. So you have that in escrow, so to speak, with it's a collateral for your loan. But if you allow the person to pull their money out of Bitcoin and maybe gave them a loan that they were going to put into real estate, right? You now have two assets that you're collateralizing. You have the liquidity from the Bitcoin, and you also have a digital asset on real estate. And he just stopped for at least, I would say, 15 seconds. And he said, you know, that can work. That's what he told me. That could work. Because at least that way we know we can liquefy the Bitcoin side of it. And by holding the real estate, we know it has value, and it might take a little bit longer for us to sell it, but it still will be holding its value. And the real estate will more likely be able to pay the dividend through its dividend, pay down the interest on the note that was borrowed from the Bitcoin, right?
Exactly.
So it's a win-win, smarter, and it's a smarter loan document. And he really realized, wow, maybe we should be taking a look at this. And now that's going to be an opportunity for us for some liquidity. It also, speaking to that, it makes for a more secure loan and a better loan in which you can actually charge, better rates because you have less risk, right? So that was really interesting to hear these comments from not just one, but several people in the DeFi space as well as the CeFi space of why they weren't going after real estate. But now they're feeling that if there's a liquidity market for the real estate, they would easily go into it, and they want to go into it because they noticed that a lot of people who are borrowing against their cryptocurrency are using those proceeds to buy a house, right?
Yeah, exactly.
So
I think the the integration or the bridge with the Deco ecosystem is the next big thing for tokenization, without a doubt. Giving real estate developers the ability to access the DeFi lending ecosystem and not going to the bank, I think will be hugely important and hugely significant for the future. And also creating the liquidity in the real estate space that we don't really have today. Still, even with security token exchanges coming up and different initiatives, it still really doesn't exist. So, but hopefully with sort of integration into the DeFi ecosystem can give it to us. And I totally agree with you that the interest will be there, and I think that the DeFi investors will actually be really interested in diversifying into real estate.
Yeah, because you think about what they're doing right now is kind of artificially creating value, right?
Putting everything on a single plate, really. Yeah,
there's no asset behind the cryptocurrencies that they're making an asset by making a loan using smart contracts, but it's kind of artificial because at the end of the day,
it is.
If the market crashes, there's going to be a lot of illiquidity, right? And paying back those loans will be kind of difficult. But if you have real estate behind it or some kind of asset, would be diamonds or gold, then there's an easier way for you not to crash. So that was a very interesting conversation. And then finally, on that same topic, these bigger players realize that they want to obtain international or institutional input, institutional investments on the CeFi, right? How do we get these big companies to invest in what they're doing? And they realize that the only way institutions are going to come into what they're doing is if they're doing something on a level of where the institutions understand the product that they're doing. The institutions aren't going to be very comfortable in being behind loans that are being pushed out for people to buy more Bitcoin. Take a loan so you can buy more of a very risky product is not going to be very appetizing to an institution. But if they switch their profile and they now had, hard assets that have value, whether it's diamonds or gold or real estate, more institutions will be more comfortable with that because they can value the collateral of the asset and feel like, well, there's a backdrop in terms of where the value can fall down to.
Yeah.
Are you in agreement with that?
Totally. Both sides of the market will benefit from the other. The tokenization market will benefit a lot from the DeFi market, get access to lending and get access to liquidity, and that the DeFi market will also benefit getting access to more stable, not so volatile assets for diversification. And I think that most crypto investors, even the most hardcore, will always have some kind of fear that their assets will suddenly lose a lot of the value, and to make them sleep better at night, they need to get some real estate-backed tokens.
Yeah, absolutely. Well, we talked about liquidity before and the lack thereof in the industry for tokenization. And why do you think that is right now? Why are we seeing less liquidity?
I think it's for regulatory reasons. So we're working with securities, and that's what's holding us back, I would say, compared to the DeFi ecosystem and the rest of the crypto market. So we're working with securities. We are under securities regulation, and it's going slow. And every time we want to carry out some kind of activity, we may need to get a license or be regulated, or at least consult the local regulator before we do it. So for instance, on liquidity side, we have a few active security token exchanges around the world, like T0 in the US, which is a market leader. It's taken a long time for them to get the licenses and to get started and to get all the processes in place. And I speak to them regularly. I know that it's very difficult for them actually to operate a security token exchange within the existing securities regulation, because it's not really prepared for blockchain-based technology. So they have to make a lot of hoops and shortcuts and extra activities that wouldn't really be necessary if they could just do it on the blockchain. So it's going slow, and but it's going in the right direction. And I think that we will see, I don't know, a factor 10 or something like that on that within the next year or so, because it's opening up and it's becoming easier. And then I think we will also see just the ability to fractionalize on real estate is giving a lot of liquidity in itself. And I also see we will see a lot of liquidity coming from the interface into the DeFi ecosystem, but maybe a little bit further out in the future.
Yeah, no, you're good points you're making there. I feel the same way, but I think that there's also another major component there is that there's just lack of product, right?
Yeah.
I mean,
yeah.
if we tokenize $100 billion worth of real estate shares, right, and it's out there, people tokenize their assets and investors bought those assets, just like they're buying real estate assets every day right now, right, by the hundreds of millions of dollars, billions of dollars. If that was out there in the marketplace, that's going to now drive liquidity, because now people are going to want to exit for whatever reason. They're going to want to sell, and that's going to create more liquidity, and they'll put it to the exchanges so they can get liquidity. But I think the reason why you're seeing a lack of activity is because even though we had a growth rate of digital exchanges, ATSs that can actually sell these shares, they don't have much product on their exchange, right? They're still mostly trading cryptocurrencies, or they're trying to raise funds, but there are not a lot of really solid hard assets out there to choose from, as you see in the general brokerage market. So I think
it's a vicious circle.
Yeah, it is. But you know, I'm hopeful that if more groups come out like RedSwan and digitize the assets first, and then sell those assets to investors, because the investors just want to buy the asset in a digital form in order to have an option for faster liquidity, then that's going to spur more digitization of real estate, more owners holding real estate in a digital form. Because think about it, they have nothing to lose and everything to gain if they're holding an asset that they bought with a digital footprint, because they can still always sell the asset to one buyer 100% they like. But if they are able to use liquidity, because now there's more out there, there's going to be a much more active exchange market than what we're seeing right now. I think all we have right now are a couple companies like the Aspen Hotel. Exactly. One of the only ones that are out there of institutional quality trading. And then below that, you're seeing realty, which is trading on, homes, small homes in Detroit, Michigan, and places like that. And those homes are selling between $30,000 and $100,000. So it's just too a wide gap.
Large gap. Yeah.
Right.
We're missing something in between. Yeah.
Yeah. We just need more product. And I think that as people realize, look at their balance sheets and say, well, we have all this product that's in the analog form. And if we move some of it it makes sense to move some of it in digital form, as I was saying before, because now if they're digital form, they have an option to attract some of those, cryptocurrency values that are out there that's growing by the trillions. That makes sense. Without having digital form, they're totally ignoring that entire market of cryptocurrency.
Yeah.
So that's why I think it's going to improve their liquidity overall.
Yeah, well, you're right. It's actually a two-sided marketplace, and anyone working with business models knows that that's a difficult business model to grow, because you need to grow the two sides of the business at the same time. So the more product we get, the more investors we will attract, but also the more investors we get in, the more product we can push in. So it just takes time to develop, but it's growing in the right direction, and all industry reports indicate the industry is growing really fast. So it's something like 80% year by year, or something like that, I think. But in reality, I think it's much faster than that.
Well, let's talk about RedSwan and DigiShares. I know that's something that you're very interested in. So am I. The reason why we're partnering together is because you provide, on-ramp for us, for international investors who want to buy digital securities and commercial real estate. And I really think that there is a strong appetite of international investors who want to buy projects in the United States. And the reason why I say it, because when I was at Cushman & Wakefield for the past 18 years, I really led the activity of Asian investors to buy assets in the United States because they wanted the dollar-denominated type of returns, right?
Yeah.
And I don't think that has changed. China might have pulled back some, but now you see Vietnam emerging as a leader in the Asian market that's looking for U.S. assets. Where do you see this going? Do you see the demand picking up in the international markets in Europe and Asia? And you see your platform being a vessel to process that type of activity?
Yeah, I think we do see demand picking up, but it's still coming a bit slow, I would say. The demand is mostly right now on the issuer or the developer side, where we have just in the pipeline that we can see around us 20, 30 projects coming out over the next half a year, something like that. So we will see, I think that will spur the adoption also for the investors, and we will start to see a lot of investors coming into the space. So right now, there's no single place to gather these investors. It's a very fragmented space. So I think we'll also be looking towards some consolidation next year or the year after. But it's coming, and it's going in the right direction. But I have to say a bit slow on the retail investor side, as we also mentioned earlier.
Well, what can we do in terms of getting exposure to these assets? We can bring you $1 billion worth of shares of real estate and high quality assets. What can we do to get that exposure so the retail investor actually sees it and said, wow, I can use my cell phone and buy into this building that I love for $1,000. What can we do to increase that exposure so we have better distribution channels throughout the international markets?
Yeah, so what we're doing is we are constantly trying to speak and partner with companies that can provide access to investors. So it could be exchanges in different countries, so it could be broker dealers or other types of investor networks. That's something that we spend quite a lot of time on building up. But on the other side, I think it's also it comes down to marketing, and in jurisdictions where you are allowed to market these offerings, I think that's maybe the best working way of getting the interest right now in lack of better options. But it's work in progress.
Yeah. And we need more marketing dollars, right? So I think as we raise more capital, your firm, our firm raises more capital, we now can allocate more marketing dollars to actually put our products in front of people.
Exactly, and it's something the industry is working together on, I think, and we are all sort of collaborating on getting the word out, making sure that people understand what tokenization means and what it works to and what it means to invest into real estate in a digital form, and what benefits it brings with liquidity and fractionalization and so forth. But yeah, there's a lot of awareness still to be created, I think, in order to reach the goal. But yeah, we're all working together on that, and I think tokenization is still a little bit like a niche within the overall crypto market, but hopefully with sort of the cross pollination with the DeCo ecosystem and so on, we can increase the awareness.
Are you hosting or showcasing any of your clients' projects on your site, so that, because people are coming to you because they want your service of tokenization and also cap table management, right? Is there any way for them to know what you know, or be able to showcase? How's the best way to get that out there so that we have more people showcasing digital assets that are available?
Yeah, so we are not licensed or regulated in any way. We merely, I would say, provide the software platform on a white label basis. So we are not actually allowed to solicit any of our white label partners' projects. Of course, we can issue press releases and create some kind of visibility, but generally we are not legally allowed to assist in the financing process in any way. So we are a bit limited in that way.
Even in the marketing process.
Not we couldn't legally, I think, participate in it. It's something that we are very careful with, and I know that especially in the US, there's a lot of regulation around this. So we need to be careful.
Right. Well, if they're in, as far as the regulations are concerned in the United States, you have to be a broker, licensed broker dealer, in order to market those assets and collect a commission on the marketing of those assets. And I think in overseas, in certain jurisdictions, the same. You have to have some type of a jurisdictional license to be able to promote.
Yes.
And I was really understanding the reason why we're having the challenge in terms of getting content promoted, in terms of the issuance. Everybody is out there right now for the secondary market for trading, right?
Yeah.
They don't have anything to trade, so they're burning a lot of capital waiting for something to actually trade. And the reason why they're not behind the issuance, and even companies like Coinbase are not promoting the issuances, but they're going to be promoting the secondary trade as of January 2022. They want to get in the secondary market. And I figured out why. The reason why is because to promote issuance, you actually have to understand the investment and be able to explain the investment in terms of its qualities and attributes, right? So you have to know the product you're selling. When you're talking about a secondary market, the person who already owns the asset knows what they're selling. They just now want to liquidate it. And so now they're looking for somebody who knows who wants to liquidate what they have, and somebody who also wants to buy what's being liquidated, and they can just match it up. And they don't have to tell the story as to what the performance is going to be like on this asset, what the IRR is going to be on this asset, which is what more institutional brokers have to do.
Yeah, it's an easier proposition.
Yeah, it is. So that's going to have to change, and I think that will change. I mean, we're talking to brokers, dealers in different jurisdictions because we want to work with them and we want to compensate them for buying or issuing our product to their customers if they're licensed in their jurisdiction. And I think that's going, like I said, I go back to the same concept that if we can get brokers to issue billions of dollars worth of product to their customers because they want to own quality assets, whether it be real estate or whatever, funds or diamonds, then at least it puts the content onto the blockchain. And then the next step is the secondary market when they need to liquidate. So
exactly.
So we're working towards that. Well, I'm glad you came on. I wanted to just share some of those concepts with you because I know that these are some of the things that we're kind of dealing with right now. But I think we're making a lot of progress. Is there anything else that you can think of that we should share with the audience in terms of what we're doing in our industry?
No, maybe an anecdote from yesterday. So what's keeping the industry back is really also a regulation, I would think, and legal issues. Yesterday we had a case with an investor being concerned whether a tokenized share would be taxed similar to a crypto asset, which is actually a critical question if you think about it, because crypto assets like Bitcoin and Ethereum are often taxed completely different from shares, right? In most countries, I think. But if the tax department views a tokenized share as a digital asset, we could actually get into the situation where it's taxed similar to Bitcoin or Ethereum by an uneducated tax department, I would say. So it's just an example of what we are up against, and I would say getting the understanding out there and making the regulators understand also that we're just dealing with shares and normal securities here, but they're in a digital form, right? They're tokenized, but it's the same. It's the same thing. It's just a smarter infrastructure and a smarter technology to process and to transact. So yeah,
I had people ask me that same question. Matter of fact, I had somebody walk up to me and tell me something that I thought was totally not true. They said, if I own Bitcoin, I transfer it into USD, USDT or USDC, I don't have a taxable event. And I thought, I don't think so. I think that would be a taxable event. On the same token, if you have a security token that improves in value and you sell it, there's more likely going to be a taxable event. If you sell it at a loss, there's more likely going to be a loss event, right? So I think that both of them are very similar, but we just need to be able to, educate people on getting into the marketplace. I'll leave it with this. I had a really good conversation at the conference with, they call him Mr. Wonderful. His name is Kevin O'Leary. You know that guy?
Okay.
On the Shark Tank. He's a Shark Tank.
Okay. Yeah, great.
So you have Mark Cuban and some other people, but he's Mr. Wonderful. And he was telling me, and they brought me to him because somebody was having a conversation about the legal aspect of selling digital securities. And he thought it was still illegal to sell digital securities to other individuals. And I came over and told him, I said, no, the SEC has actually banned ICOs in 2018, but they approved STOs. And so there is a legal format for selling security tokens. And he said, well, if that's the case, then I want to get deeper involved in it.
But it says something about what we are up against, I would say. So there's a lot of education needed and awareness to be created and success stories to be created in order for people to get into the space.
Well, aren't you happy that you're in this space? Because you know that it's a matter of time as things going to increase. You're a leader in the marketplace for the service you're providing. Yeah,
absolutely. It's going in the right direction. I'm happy to work with you also, Ed, and I think we are doing a good job.
Yeah, well, thank you. I appreciate working with you, Claus, and I think that we'll be busier and busier as time goes on. But I promise you this: I will continue to increase the content so that we continue to have the opportunity to make more transactions between our companies.
Exactly.